Hey guys, welcome back. You're still watching Power Breakfast, and let's now talk about the important macro cue, which is the first quarter GDP has come in at 13.8%. This is significantly below the expectations of around a 15% growth. In fact, GVA has also come in at 12.7%, which is below the CNBC-TV18 poll. So Latha is here to take us through a roundup. Latha, what was disappointing and what really held up this time?
Well, actually, the number itself, 13.5%, is below market expectation. Our poll was 15%, as you said. And the Reserve Bank forecast, they forecast quarterly, and that number was 16.2. So now if you, instead of 16.2, if you substitute 13.5, and the other quarterly forecasts of the RBI are retained, then we will not get to the 7.2% growth which the Reserve Bank forecasts for the full year. In fact, you will get well below 7%. Now, let us take the whole number. The Q1 GDP is 36.85 lakh crore. This is only 3.8% higher than the pre-COVID 3-year-ago level of about 34 lakh crore. So, you know, that is the extent. In 3 years, all that we have done is a 3.8% growth. If you look at manufacturing, then in this quarter, the April, May, June quarter, it was 6.05 lakh crore, and that's up that is up 4.8% over last year. But if you compare it to 3-year-ago level, it is only 7% higher. And that shows the extent of recovery being very weak. Construction like that, in the same vein, is 2.62 lakh crore total GDP. It looks like 16.8% higher than last year. But if you again look at the 3-year-ago level, it is only 1% higher than the 3-year-ago level. Trade, hotels, transport is a very big category. It's about 20% of the entire GDP, the services sector. That is at 5.59 lakh crore GDP. That's 25% higher than last year. But it is down 15% if you compare it to 3-year-ago level. So that is the MSME sector which has suffered so badly. Private consumption, if you looked at it, 22 lakh crore. Good number is about 10% over the 3-year-ago level. That is the only tolerable number, 10% over the 3-year-ago level. So in 3 years, it's an average CAGR of just 3%. And likewise, gross fixed capital formation at 12.7 lakh crore is up 20% year on year. But again, 3-year-ago level, it is about 6.7% higher from 3-year-ago level. I mean, you won't call it spectacular. Not surprisingly, you've got a string of GDP downgrades coming in. The first one came from Citi. Citi was sitting well over 8%, and they have revised their figure to 6.7%. I think we also have Morgan Stanley's number. Morgan Stanley was standing again well over 7%, and now that they are marking to market the Q1 growth, they are going to see the growth 40 basis point lower at 7.2. They were sitting, very close to 7.5%. And finally, you have the JP Morgan view. Again, they are expecting growth around the 7% mark. Actually, most economists don't expect 7%. It's a little below 7% that they expect for the full year.